Brad Williams, Frugal Finance. I know one of the biggest responsibilities that we endure on a daily or monthly basis is that loan payment on the car. And it's something we deal with. That's just part of our mode of operations in the United States. We drive everywhere. And subsequently, you need to know how to finance or lease a car. And I won't get into the numbers yet. At some point in time, I'll break out spreadsheets and I'll do some number crunching here. That would be the finance side of Frugal Finance. But I'm just going to go over this. This will be a little bit lengthy. Why? Because, the car industry is just the car industry. There's just a lot of games that are played, and I'm just going to give you some advice from the Federal Trade Commission on financing or leasing a car. This document, a link will be provided in in the summary below. Financing or leasing a car. Are you shopping for a car? You have options other than paying cash. Whether you finance or lease, here's some things to keep in mind. Again, you know me. I am the frugal side, and if you can pay cash, pay cash. Why? Again, the less cumbersome, the less things you have to worry about, the easier life is. I don't know. It's just, in my opinion, paying cash. You save it, you pay it. That's just the way it works. Before you buy or lease a car, get a copy of your credit report. Why? Because we're all driven off of what is called the FICO score. I know FICO is just that would be like Crescent Ranch. Well, FICO is the general term used. The loan terms will be driven off of your borrowing ability. And subsequently, what you're shooting for is a credit score above 720. That would reflect a AAA borrower, and you're going to get the best deals. So get a copy of your credit report, and you can get a free copy. And I'll go over this so many times, you're just going to go, Williams, you get a little overboard on the free credit reports. Well, if it's free, then take advantage of it. You can go to annual credit report and dial in there. I won't get into that in this particular video. Get an out of the door price of the car in writing before you visit the lot and before you talk financing with the dealer. I'm not into vehicles. I have the same vehicle from 1992. This is what I did long ago before the advent of the technology today. I sent out pretty much a request for quotes, an RFQ, to all the local dealers. And I didn't go from store to store. I didn't talk to salesman after salesman and all their role. Their job is to sell and yours is to buy. And so I got a general idea of the pricing. Then with that information, I was armed. Then I knew what my leverage was. So today, and again, what I did was I set up a temporary email address. I mean, they will spam the crap out of you, and they'll do it for months at a time. I sent it out. I got all this information. Then I started comparing. And you can do this with lenders too. I don't know if you'll get the same response, but your options now are available. And clearly, you're gonna have access to a lot of online information that will provide a little bit of assistance. But it's all local and a one-on-one kind of deal, and everything is negotiable. So here, arm yourself. So you're going to go in here, and what you're going to do here is this: if you get this general information, it means that getting the dealer to send you the total price of the car before financing, including taxes and fees, you'll be shocked. You'll be shocked at the different, I use this word rack rate. They're going to have this manufacturer suggested retail price, the rack rate. It's just senseless. It's just a number. And if you see this pattern, you just have to stick with it. All right. You need an apples to apples comparison so you can do some serious shopping here. You're going to get some prices that just make no sense. And clearly, that's not the kind of the dealership you want to be working with. Know your total cost, not just the monthly payment. This is what people unprepared will go in, and when they buy a car, or for that matter, anything else, they think of their monthly payment. You can't do that. You have to make a budget. You're going to say, I'm paying, the financing now is, they can go out to 6 years for a car. When I bought a car, the max loan amount was over a 36-month period. Here's my suggestion, and take it for what it's worth. Narrow down your payment terms. In other words, you're going to pay a whole heck of a lot of less interest. You're going to own the car, or if you're the type of person that just keeps rolling the car over, then not literally. But if you buy a car every 3 years, then maybe you can write off the interest. But otherwise, shrink your budget period down. In other words, try to narrow down that obligation. Then you can own the car free and clear. Low monthly payments offers can be tempting, but don't focus solely on your monthly payment. For example, lower monthly loan payments often require longer terms and higher interest rates, which will subsequently increase your overall costs. calculating what you can afford, use this budget. If I haven't shown already, there are a lot of budget worksheets out there. Turn off the television, turn off the social media, and just prepare a budget. It doesn't take that much time. Consider saving for a down payment first. Again, it's just discipline, not a big deal. No, we need to keep up with the Joneses. Well, again, this is frugal finance. We don't keep up with the Joneses. We don't keep up with anyone. They're not paying your bill, so who gives a crap what they do? So consider savings beforehand. Ask if you'll need a cosigner. Well, you know that presented cosigner arguments and they're not favorable. But if you need a cosigner, do them a favor and do yourself a favor. Narrow down the term of the loan. When I mean term, 1 year term, 2 year term, 3 year. Personally, I would never co-sign for a term longer than 3 years. Then my name will also be on that contract, because if I'm co-signer and you fail to pay it, guess what? At least I'll have some collateral in order to handle your responsibility. So keep that in mind. Factoring in a trade-in. This is a little game that's played, and never, 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 never. Well, I can't say never, never, never. But look to see the trade-in value of your car. And it's easy to do. These links will be posted below, as I stated. You can check the NATA Guide, Edmunds, or Kelley Blue Book. Kelley Blue Book is the go-to, but other sources are available. Just do a comparison and see what current market price is. And then locally, check to see what the retail price of your car is. Wait to discuss the possibility of a trade-in until after you negotiate it. That's the first question they're going to ask. You're going to trade this thing in? Well, you're going to have to be prepared to say, well, no, I'm giving it to a family member. Everyone lies, so you can continue your lies when you're doing this negotiating. It's called negotiating. That's part of it. So in order to get the best deal, be prepared to list this online and sell it online. And the dealer's going to work the lowest possible number on you if you trade it in. So just keep that in mind. Know what you owe. If you still owe money on your car, trading it in might not help much. Owe more than the car is worth. That's called negative equity. And it's put it very simple. You trade your car in, you still owe $5,000 on that car, and the market says it's only worth $4,000. Well, not only in addition to your existing loan, which is going to be $1,000 after net, you're going to have this new obligation. If you want to use the car for trade-in, ask how the negative equity will affect your new financing or lease agreement. For example, it may increase the amount you are borrowing, the length of your finance agreement, or the amount of your monthly payment. Financing a car. You have two financing options: direct lending or dealership financing. Direct lending means you're borrowing money from a bank, finance company, or credit union. In a loan, you agree to pay the amount financed plus a finance charge over a certain period of time. Once you're ready to buy a car from a dealer, you use this loan to repay it. And I'll get into depth here down the road. But if you go with dealership financing, the wording on that contract could be dangerous. So let's get into what's the FTC saying about this. With direct lending, you can get your credit terms in advance by getting pre-approved for financing. Before you shop for a car, you know the terms, including the annual percentage rate, length of the loan, number of months, and maximum amount you can borrow. Use this information to negotiate with the dealer. The APR is the cost of credit on a yearly basis. Let me just give you a brief overview. You walk in, the current note rate, note is the note, okay? That is what the premises is. In other words, you start off and then the lender's saying it's 6%. Oh, that sounds competitive. Then they start charging behind the scene fees, etc. They start throwing everything in this bucket. They don't mention it, but it's affecting the APR. So let's say they throw in a sizable amount of fees, and this is common, and all of a sudden your total APR goes from 6 to 8.5%. You're going, how did that happen? Well, you know, all those add-ons that you threw in, and you threw in a bunch of other miscellaneous fees and what have you. Well, it affects the APR, but not the note rate. So keep that in mind. It's based on several things, including your credit rating, the amount you borrow. You remember I just said they can throw in all kinds of fees? The interest rate and credit cost you're being charged and the length of your loan. Be careful. When you're dealing with the auto industry, they'll say this out loud and up front. Yeah, we got this great 6% deal. But then when you're signing the loan, they don't seem to mention the APR. Oh yeah, they'll give you the truth in lending statement, but you don't know how to read it. You're just going to sign it because there's a bunch of other documents and they bury all the stuff and they're not doing anything wrong, but they're not explaining the terms and the conditions. Comparison shop among dealers. With a pre-approval in hand, it's easier to ask dealers for a written out the door price on a car you may be interested in. That's the total price of the car before financing, including taxes and fees. The price helps you identify and negotiate the best deal on the purchase and the financing without having to spend time in the dealership. Dealership financing means you're applying for financing through the dealership. You and the dealer enter into a contract where you buy a car and agree to pay over a period of time the amount financed plus finance charge. The dealer typically sells the contract to a bank, finance company, or credit union that will service the account and collect the payments. And they take a fee off of this. They're earning something over the life of that term called evergreen income. It's not a lot of money, but it's something you're paying. Dealership financing may offer you multiple financing options. The dealer's relationships with a variety of banks and finance companies, they may mean it can offer you a range of financing choices. Keep in mind, however, that the dealer typically profits from offering financing and may not always offer you the best deal. That the same caveat works with credit unions, banks, finance companies. You have to shop around to see who has the best deal. Special programs, dealers sometimes offer manufacturing sponsored low rate or incentive programs. They may be limited to certain cars or have special requirements like a larger down payment or shorter contract length. These programs also might require a strong credit report. Check to see if you qualify. Shop for the best financing deals. As I just mentioned, compare financing offers from several creditors and the dealer. Remember, don't focus only on the monthly payment. The amount you'll pay depends on the negotiated price of the car, the APR, and the length of the loan. Now, there are plenty of calculators out there, and I'll have another video on that. This video is a little bit lengthy. I'll present another auto financing using a calculator. Many creditors offer long-term loans like 72 or 84 months. That's a long time. Well, that's kind of good and bad. The 72 or 84 months, meaning the quality or the workmanship of vehicles is much more dependable and reliable in order to finance a vehicle for 6 or 7 years. But still, that's a lot of interest that you're paying. Think about a shorter 36 to 48 month term. While these loans can lower your monthly payments, you may have higher rates. And the longer the length of the loan, the more expensive the deal will be overall. Cars quickly lose value once you drive off the lot. So with longer term financing, you could end up owing more than the car's worth. Some dealers and lenders may ask you to buy credit insurance that will pay off the loan if you die or become disabled. See, again, these are just games that they play. Before you buy, consider the cost and whether it's worth it. No. If you die, what are you going to do? You're going to sell the car. So why would you pay this credit insurance? Check your existing insurance policies to avoid duplicating benefits. Credit insurance is not required by federal law. In fact, it's against the law for a lender to deceptively include credit insurance in your loan without your knowledge or permission. Your dealer requires you to buy credit insurance for car financing. It must be included in the APR. Remember I said there's a bunch of junk stuff that they throw in? Here's an example of the junk. Make sure you ask the dealer about auto add-on. Add-ons are not free. They're extra things you buy and finance along with the car. Common add-ons include gap policies, window etching, and extended warranties and service contracts. It's okay to say no to add-ons and to ask the price. It's not okay for dealers to tuck add-ons into your deal or lie about them. Know exactly what you're buying and protect yourself. Ask the lender to list the price of any proposed add-ons before you visit the dealership. If you're financing, you'll want to know how much it costs over the life of the loan. Ask about any limits or conditions the add-ons may have. They might not cover what you expect. If you don't want or need it, just say no. Get used to saying no when you're doing this process. Manufacturing incentives. Your dealer may offer manufacturing incentives like lower financing rates or cash back on certain makes or models. Make sure you ask your dealer if the model you're interested in has any special financing offers. Generally, these discounted rates aren't negotiable and may be limited by your credit history. Get your answers from the dealer in writing. Rebates, discount, or special prices, ask ahead of time if you qualify for any available offers. Dealers that promote rebates, discounts, or special prices may clearly explain what's required to qualify them. Look closely to see if there are restrictions. For example, sometimes you have to be recent college graduates or a member of the military, or the offers apply only to specific cars. Don't assume that any rebates have already been included in the price or terms you were offered. Again, you'll want the answers to your questions in writing. Your annual percentage rate, negotiate the APR and the term for payment with the dealer just as you would negotiate the price of the car. The APR you negotiate with the dealer usually includes an amount that compensates the dealer for handling the financing. Negotiations can take place before or after the dealer accepts and processes your credit application. If you bought a pre-approved financing offer with you, be sure to compare the APR, loan term, and amount financed of the two offers to determine which is the better deal. You might decide to stick with the financing you brought even if you've negotiated the dealer down. Ask questions about the terms of the contract before you sign. For example, are the terms final and fully approved before you sign the contract and leave the dealership with the car? Does the price on your contract match what the dealer sent you ahead of time? And if the dealer says they're still working on the approval, the deal isn't final. Consider waiting to sign the contract and keeping your current car until the financing has been fully approved. The auto industry's been doing this for 100 years. They're not going to change. They entice you by the newness, the smell of a new car, the fact that it's just this shiny, brilliant, fun vehicle. Oh, well, it's only a car. So keep that in mind. You're looking at just a utility. Getting from point A to point B, think about how you're going to finance that. Leasing a car, when you lease a car, you're paying for the right to use it for an agreed amount of time and miles. You're just borrowing this thing, all right? You're going to have to give this thing back to whoever you're terms with. So just keep that in mind. Typical case is somebody who's self-employed, independent contractor, who can write off the cost as part of business. Whether it makes sense, can't answer that. But leasing has been around since day one. Some people, it works for some people, some not. Know how the monthly payments on a lease are usually lower than monthly finance payments if you bought the same car. With a lease, you're paying to drive the car, not to buy it. That means you're paying for the car's expected depreciation or loss of value during the lease period, plus a rent charge, taxes, and fees. At the end of the lease, you have to return the car unless the lease payment lets you buy it. Figure out if leasing is right for you. Think about how much you drive. The annual mileage limit in most standard leases is 15,000 miles or less. Now you're thinking, well, that's not, that's attractive. No, it's not. Think about it and just divide that by 12 and it's about 1,250 miles a month. Doing any type of driving, 1,200 miles, you'll eat that up. And then you start paying 25, 30 cents a mile or more. And you can see right off the bat how unattractive leasing becomes. If you want a higher limit, it will probably increase the monthly payment. That's because the car loses value during the life of the lease. If you exceed the annual mileage limit, you'll probably be charged an additional fee when you return the car. Again, there are lease calculators out there, and I'll dive into this and explain this in detail. That would be the quantitative side of the finance side of Frugal Finance. Consider all the lease terms. When you lease, you're responsible for excess wear and damage and any missing equipment. You also have to service the car according to manufacturer's recommendations and maintain insurance that meets the leasing company's standard. If you end the lease early, you may have to pay a substantial early termination charge, signing the paperwork. Review the terms before you sign the purchase and financing. Don't be rushed. Ask the dealer to slow down, especially if they're moving quickly and using an electronic process or an iPad, tablet, or other device to show you the agreement. This is really, really, really nasty. I've been in situations where they present an iPad or a tablet and they hang over your shoulder going, they're tapping their finger going, come on, sign this thing. Don't do it. Say, please step away. I'm going to take my time here and go do whatever you have to do. You can be nice about it, but you have this obligation. Or I would demand that they print this out and then you can look at it. Tell them you want to see the terms clearly before you agree, especially all the fees and charges in the deal. That way, you know the dealer didn't include charges for any extra items you don't want. Carefully compare what you're seeing at signing to what the dealer sent you beforehand. Don't leave the dealership without a signed copy of the completed credit contract or lease agreement. Make sure you understand whether the deal is final before you leave in your new or new to you car. If you're called back to the dealership because the financing wasn't fine or didn't go through, carefully review any changes or new documents you've asked to sign. Consider whether you want to proceed. If you don't want to agree to the new terms, tell the dealer you want to cancel and ask for your down payment and trade-in back. Make sure the application and contract have been canceled. Get confirmation in writing that the application and contract were canceled. If the loan was being arranged by a financing company, call that financing company to confirm. Keep copies of your paperwork. Now, here's another deal you need to be extremely careful about. If you happen to put a down payment down, make sure it is fully refundable. If you agree to a new deal, be sure you have copies, all the documents. After you get the car, if you finance the car, understand creditor has a lien on the car's title, and in some cases holds the actual title until you've paid the contract in full. Hence, why it's called a loan. Later missed payments can have serious consequences. Late fees, repossession, and negative entries on your credit report that make it harder to get credit in the future. Some dealers may put tracking devices on a car, which helps them find the car if they have to repossess it. Ask the dealer if it plans to put a device on your car as part of the sale, what the device will be, and what to do if the device sets off an alarm. So there you go. There's a brief overview. Okay, maybe an extended brief overview. An introduction, if you will, to financing and leasing a car. Now, the leasing was pretty limited in this particular discussion, and I'll get into that further. But there you go. There's an overview. Cross the T's, dot the I's, step back if you're being pushed, and stand your ground. I know you're going to negotiate this, and you have this churning sensation in your stomach. Well, practice, literally practice. What do I mean by that is you set up a deal that you know you'll never sign. And you can do it via email or face-to-face, go to a dealership. And you know you're not going to sign the deal, but get used to their terminology, get used to their practices, and set aside a couple hours. I know, that's the game. That's the game that you're going to play because they play their game. And then do this 2 or 3 times. I know people that do this just for the fun of it. They'll take a Saturday morning, they'll head to a dealership. They know they're not buying a car, but they want to see just the tactics. And then they just share that with people. But anyway, Brad Williams, Frugal Finance. Hey, finance or leasing a car. Let me know your experiences. I know. You walked in and you were so overwhelmed by the car that it was so friggin' beautiful that you just signed the documents. And then you're going, oops, buyer remorse. Or tell me you just got the greatest deal in the world, that you're an expert in this. Share your experiences. Brad Williams, Frugal Finance. Thanks for watching.